Good morning. This is Louis Llanos with Market Coffee Talk. I hope you're doing really well. Are you being on the right side of change? That's the question today. Because sometimes there are certain things that happen that are pinnacle moments. And having the ability to notice when something is important versus when something is just not important, which is noise, I think is one of the key things in living a successful life. Because every day we have a bunch of noise coming at us, and sometimes it's hard to determine what's important and what's not. And you'll never be able to determine everything that's important until much later in hindsight. But sometimes you can have good clues that something was really important. And I think that something really important happened yesterday. And that was when Biden talked about the infrastructure plan. I think that was really, really important. And the reason why is because we've been trying to do an infrastructure plan for a while. Trump tried to do it, it got kind of squashed, but now everything seems to be aligned. And why is that important? Being on the right side of change is important as an investor, because when you have something that is that long lasting, potentially, you're going to have fortunes made and lost during that period of time. And I think that was significant. Time will tell, but I thought I would share that with you, that I do think that we are in a pinnacle moment, or a critical moment, I should say, a moment where one of two things can really happen that can really shape things. And if we go down this path that we're looking at, basically what's likely to happen is it's likely to spur even more of an acceleration in commodity prices moving higher, even more so than it already has. It's likely to cause more of deficit spending, even though it's been said by the politicians that this will not cause deficit spending because the rich and the corporations are going to pay for it. We know people who are economists and are in the business know that there's no way that's going to happen. I mean, that's just not going to happen. It's going to be deficit spending. And we also know that we are already running such a big deficit that we're likely to print more money at an even accelerated rate. So that is significant as an investor. So I think one of the biggest things that we have to understand is that the value of our dollar is declining. So, but you as an investor can really profit from this. And I think the right thing to do right now is to be on the right side of change. I mean, I can think of times, there's been several times in my career where if you had not been thinking about the right side of change, you would have been left behind. The first time was when the dot-com bubble bursted. And actually, just before that was when the internet was taking off and people were not believers. If you had not seen that change and been on board with that, you would have really been left behind. The second time was when the thing crashed, when it got way overblown. And then the third big moment that I can think of was the financial crisis, just before the financial crisis happened, because the stock market went nowhere for 11 years. And then we had a period of time where it was very clear that the economy was in trouble. Had you not been taking advantage of that, or knowing that it was time to step off the elevator, that would have been, you would have been complaining and blaming and all of that. And then when we hit a absolute low and things were actually improving, many people were left behind and they didn't want to understand that change. And then the market went up dramatically under the Obama administration. So this has happened in many different administrations. It also, if you study history, this dramatic change has happened under the Reagan administration. We saw a massive inflation issue subside, and when Reagan came into office, those policies that changed literally changed the economy for the better and accelerated. And there was lots of people that were not believers, but the signs were very clear as to what was going on. In this case, we're kind of going more into what's happening right now. We're kind of going more into a period of time where we need to understand that we've had long-term interest rates going down for a long time. And they're starting to firm up now, and there's really no reason for interest rates to stay this low longer term. And when interest rates bottom before they go up, they don't just bottom and they go straight up. They bounce a lot and then they slowly grind their way up, and then they accelerate up. So I think we're in that period of time where interest rates are bouncing on the bottom and then over time will continue to rise. That we finally, I believe, have hit that point. And when you have this kind of spending that is happening, it usually leads to the same conclusion. So you can profit from this. That's my main point, is being on the right side of change is so important right now. Because if you don't see it and you just kind of do it the way it was done, then you'll miss out. So one of the things that I'm seeing right now is that the technology, everybody has been jumping on technology. And people think that, wow, technology is the right thing, right? The technology is the way to go. It's everything. And I believe that long term that's true. But right now we're also heading into a period of time where just basic stuff needs to go higher, because the demand for basic goods will likely continue to rise, and that will create more inflation. We have so many pressures right now that are inflationary, that I think we really need to take heed of that. And it's not the end of the world, right? That it's just you have to adapt to how you're investing for that. And so one of the things I've noticed, and one of the clues that we get when we can see changes really happening, is we look at the technical analysis of the stock market in individual stocks. And what we're seeing is that individual stocks, the leadership is changing, and it's likely to probably hold because of the fundamental drivers behind it. So the way you invested in the last 3 years, it's not how well, I don't believe it's the optimal way to invest in the next 5 years or next 3 years. So seeing change is really, really important. And what happened yesterday was kind of a green light for us to rebuild infrastructure, for us to raise taxes on corporations again, and then for people over 400,000 is what they said, is what Biden said, we would not see a change in interest rates now, or change in tax rates. Now we know from history that, you know, what a politician says is going to happen generally does not happen exactly how they say it. Usually what happens is some derivation of that, because once it goes through the congressional system, there's some revisions. Usually some things are watered down. But even if you water this thing down by half, it is a significant change in the economy. So those industrial stocks that everybody's just been ignoring, you know, probably don't want to ignore them. There are new industrial, younger companies that are coming up through the ranks that are likely to benefit. Precious metals rallied huge on the news, and silver. You know, all the commodities. Think about commodities. Think about stuff. So I think the right strategy right now is to recognize that that's happening. Technology will always still be part of the mix. But to ignore the other part of the economy is asking for underperformance, in my opinion. And that's the change that's happening right now. I mean, it reminds me of when you're driving in a traffic jam and you're trying to get somewhere fast and you're looking at the lanes. You're saying, which lane do I want to be in? And you're trying to gauge which lane is most opened up for me to go down. And a lot of times you can get in the wrong lane and get stuck, right? And then you can't get out of it, right? Well, I think the idea is that you have to actually step back a little bit further away when you're looking at the lane so you can see the longer, broader, longer term picture. And that's where we're at right now. If you take a step back and you look at the long-term picture and you look at where interest rates have been, if you look at where we are in our economy, not only here, but globally, I think you can come to a pretty solid conclusion that emerging markets, basic stuff, technology will still be there, be big and be important, but there is a shift and it's time to be in the right lane. So that's all I have for you right now. Hope you guys are doing well, and we will talk to you later.